Hello, everyone. This is Sebastian McMahon from IA Financial Group, and I'm back with the first economic review for the year 2022. So happy New Year to everyone out there. Before I get started, maybe just an advertisement. Yesterday, we recorded a webinar, which will be posted on social media and all of the outlets of IA on at the beginning of next week. But I was with my colleagues, Alexandre Morin, so the principal portfolio manager for fixed income at IA, as well as Marc Gagnon, who's the principal manager of Canadian equities at IA, and JP Chevalier, who manages the thematic fund, among other things, so US equities. So we discussed many topics. It's going to be available early next week, the week of January 17. So watch out for it. Probably it won't be out when you listen to this, but we'll be publishing that on social media. So now the year has started. It's already quite eventful. So let's dig into what happened over the last 2 weeks right now. All right, so the already a lot of action in the markets after only 2 weeks. If you look at year-to-date returns for bonds, already have something that looks like the end of 2021 picture. So negative returns, almost -5% for long bonds. So interest rates are moving higher. The Fed seems more hawkish, so we'll dig into that in a few minutes, but are already there. TSX up, emerging markets. We expected good things out of emerging markets in 2022, already started to happen. So 2% positive, 2% plus positive for emerging markets on the week. Year to date, we're positive. And the S&P 500 and NASDAQ, both markets were pretty expensive, had done very well the last few years, or their reversal here. So the tone is set. It's more towards global ex-US emerging markets. So of course, we're only 2 weeks in, but these themes are starting to develop. USD CAD up on the week, up on the year, price of oil higher, gold a bit of volatility. So COVID now, maybe just another angle. So in the next few weeks, we'll know whether the US is willing to impose new measures or not. So we've heard from the US very little appetite to go back to mitigation measures, to lockdowns. Of course, when hospitalizations are below previous peaks, maybe the urgency is not there as much, but now the hospitalizations are at a record. So we'll see if we'll test that model in the US, and maybe the headlines like we have on the left. Omicron, maybe it's estimated that about 5 million Americans could be stuck at home because of COVID. So that's going to be putting more pressure on corporate America. So will they be willing to do something or just let it go? So we'll learn more about it over the next few weeks, but it could be an important risk to the global landscape if we go back to measures there. Jobs report last Friday, we had Canada and the US reporting. Advantage Canada showing this picture every single time. The rebound in employment has been much stronger here than in the US. And also what was interesting is that in Canada, we keep on beating expectations for jobs growth. And in the US, it's below. And it was about 50% less jobs created in the US than what was expected. So it seems that it's harder and harder to fill the jobs in the US that are posted. It's hard to find workers, and it's another headwind that's facing the US economy. So Omicron, of course, is not helping here. When we move to inflation, we had inflation in the US this week. It came out for the month of December at 7.2%. So the highest since 1982. And if you look at the chart, the light shade of blue part is transport. So it's gasoline, used cars, and new cars. So as you can see, it's more than half of the inflation is coming from that. We know that inflation is the change in the price level from one day to another with 12 months apart. So this is December 2021 versus December 2020. And we know that prices for gasoline and cars started growing very quickly early in 2021. So as we move towards January versus January, March over March, April over April, I mean, when you move towards the further on the year, you're going to have these effects fade because of the base effect. So Are we at the top? It's hard to tell. Probably we are. If we're not at the top, we're near the top. But we are expecting a slowdown in inflation just because of the base effects over the next few months. And if we look at a few economic indicators, so now we have the manufacturing surveys that come out. There's a component that is the prices paid component, which, as you can see, it tends to lead because it's leading by 3 months in the chart here. The blue line is the prices paid index. We advance it by 3 months, and it kind of correlates very well with total inflation. And as you can see, it is suggesting that the peak, if it's not in, it's near. And after that, we could be in for a sharp decline in the inflation rate. So we should be moving lower over the next few months. Is it next month, in 2 months? It's hard to tell. But if you look at the consensus of economists surveyed by Bloomberg, blue line here is the US, and for 2022, inflation is expected to be at 4.5% on average. So we're at 7.2 right now. So we need to move down, and we need to have probably towards the late part of the year to be below 4.5%, just to have an average at about 4.5. So maybe that means that we will end the year somewhere between 3 and 4%, 3 or 4%, and not at the levels that we are seeing right now. Same thing for Canada. Remember that we're at 4.7% in November. The December figures will be coming out next week. So if we want to have if economists expect an average of 3.5%. That means that we'll have to run below 3.5% for a good part of the year. So everyone's expecting a moderation in inflation. So let's see how it unfolds. But the theme in 2022 should be inflation remains important, but it's slowing down. It doesn't keep on accelerating. So financial markets now, the Fed coming out even more hawkish than expected. Remember that in December, mid-December, they came out saying that, we'll be accelerating the tapering of quantitative easing. So we'll be buying less and less bonds every single month, and we'll stop buying bonds on the markets in March instead of June. So that was one thing. And the other thing was, they were expecting 1 hike in 2022. Now they expected 3. So more hawkish. That means we want to normalize monetary policy. And now on January 5th, we got the minutes from this meeting. So always dig into that to see, these were the announcements, but what did they discuss and what was the tone of these discussions? And we realized that not only are they taking a hawkish turn, but they also discussed going even faster than the 3 hikes. And they're talking about even reducing the size of their balance sheet. So the bonds that they've been buying, and they're still buying right now, maybe start to sell them pretty quickly after, just to normalize monetary policy as quickly as possible. So that was a very big surprise, a very big hawkish surprise. So it had an impact on interest rates, like here. So the yield curve, so the full line is today. 1 month ago, that's the dashed line. So it moved higher. So that means that every single interest rate along the curve, so you have the 5-year maturity, 10-year, 15 years, all the way to 30, up everywhere. So tighter monetary policy means higher interest rates. So that weighed on the S&P 500, on technology, on NASDAQ. So that explained, and it weighed on the US dollar. So that explains the market movements that we've seen so far. So it's only 2 weeks in. These things can reverse. We can have volatility. We can have all of that. But what we were expecting for 2022 was in these lines. So it's interesting to see that develop so quickly at the start of the year. So what to watch next week? Retail sales in Canada, CPI inflation, and housing starts. And in the US, we'll have housing starts and building permits. So the highlight of the week will be the inflation report in Canada. So we'll be discussing that next Friday. So that wraps it up for the week. ia.ca/economy if you want to follow us. On Twitter, you can follow me. On LinkedIn, connect with me if it's not already done. A PDF version of this presentation will be posted there already when you get the video, because I post it right after recording on Friday morning. So it's going to be there. Economy Finance 101, there's still some material there. We will be adding a lot of stuff in 2022. Right now, we're stuck into the cut by the year ahead outlooks and the recap of 2021. But when the dust settles, we have a few things lined up here. So you'll see more material through the year for Economy and Finance 101. So thanks everyone for following us on a weekly basis, and I'll be back again next week.